Good morning, traders. It is Friday, February 17th, the last trading day of the week. Options expiration. Lots of excitement today. We got our lottos that we do every Friday. We'll have even more to pick from because we've got monthly options expiring today as well. Let's take a look at the last pick. I've got some super exciting news for you. Boeing, that was our last pick. We were selling an out of the money bullish put spread. The notion there is that this relative strength is going to be preserved even if the market hits some rough patches, which currently we are hitting a rough patch. Market is pulling back. We had a hot CPI number, hot PPI number this week. So we can expect this. We are in a bear market, but I am seeing signs of support. And so we're going to use that bias to find new trades and to structure those trades. So our strategy was to sell an out of the money March 17th, 205, 200 bullish put spread for $1. If the stock is able to stay above that $205 strike price, that spread will expire worthless and we will generate about a 25% return on that spread. Very, very nice spread. You can see that when the market has been choppy and moving lower, what has Boeing done? It has continued to move higher, has great relative strength. It tells us that institutions want in. They are anxious to buy this stock. That is how we increase our probability of success, because we know that as the stock pulls back, if the market does pull back, then these buyers are still going to be there. If by chance the market deteriorates greatly and this 205 support level is breached, also coincides with the 50-day moving average, then we can expect the stock to start pulling back. Well, gee, what do we do then? So I'll give you a little bit of a caveat on holding the position and how you would want to adjust it. There are two approaches that you can use. One is that you roll farther out, meaning you would roll this position from March to April, and you would roll further down. So perhaps you do a 195, 190 bullish put spread, and you would try and do those for a fairly even credit, meaning that you buy your losing put spread back and then you sell the one farther out on the notion that this is just a market dip and that eventually the market is going to recover and that the stock is going to recover. Certainly like that, especially given that I feel that we've seen the nastiest of the market decline. Here's the other way that you can approach this, and this is more in line with how I trade because I can watch the market every day. I'm a day trader. So the market is approaching some major support levels. We'll put up the 200-day, the 100-day, the 50-day moving average. And now we've got all those major moving averages so we can see where they come into play. We also have a major uptrend line right here. So let's draw that in. You can see where that comes into play. So we're going to connect that low right there. We're going to connect these lows right here. This is what I am looking at. As long as the S&P 500 preserves this support level, so we've got the 200-day, we've got the upward sloping trend line, we've got the 50-day, they all come into play roughly around the 392 level. Market's going to pull back a little bit on the open today. As long as this general area is preserved, this is a swing trade, so I am willing to let the market move around. I am willing to let the stock move around. I am expecting that when I put the trade on because the market has been herky-jerky, okay? Not a lot of movement. So, yeah, it's going to have its little fits and spurts. That's what we're currently seeing right now as far as my market thesis. So as long as this level is preserved, I'm not going to panic on Boeing. I'm going to have to watch it. I'm going to have to monitor it. But if this level is breached, that tells me that we could see further downside in the market. That presents a risk to me because 75% of all stocks follow the market, and Boeing could be one of them. In that event, if this 205 level is breached, and if this level in the SPY is breached, then I'll buy back the 205 put. Stock will continue to drop because now support has been breached, and I'll hang on to my $200 put And as the stock breaks that 50-day moving average, I will look to exit that $200 put at the same price that I bought the 205 put for, and I'll still capture my $1 that I got for the initial credit. So that's just a little insight for you. I am not panicking. We're going to get into the market in just a second. Here's the other stock that I highlighted. So we're going to have a lot of open positions. We're going to have pending positions because we are engaging in longer term swing trading strategies. You see me be very, very active on short term, overnight swing trades, so very, very short-term swing trades, lots of J trades that I've highlighted over the course of the last year. That tone is changing because the market is changing. So we're seeing these intraday ranges compress to a large degree. Day trading had been so dang lucrative in 2022 that it didn't require us to take any overnight risk. We were making so much money intraday on these moves. Why would you carry an overnight? You don't need that risk. And one day we'd have the S&P down 70 points. The next day it'd be up 70 points. So it was very, very difficult to swing trade. Well, now we're starting to see the market settle into a range, and we're seeing two-sided price action, buying and selling. So the other stock that I highlighted, which has done very nicely, is SONO. What was my thought on SONO? Well, I love this horizontal breakout here. We had multiple trend lines, which I'm going to get into my new trend lines. Yes, they are to market. They are public now. We released them last night. So all of our members are going to be using these automated trend lines. They're going to change the way that we trade. I know they are because in the 2 months that I've been refining them and studying them and getting them to market, I've seen things that in the last 30 years I have not seen. These patterns were not readily visible to me, so they lend an incredible amount of clarity to our trading. In any event, Sono is a stock that broke out. I love this horizontal breakout after earnings. I want to own this stock. I just don't want to own it up here. I want to own it down here on the breakout. So we sold a $20 put. I had suggested getting at least 50 cents for that. I think they're trading at 60 cents. At the time of the video, they traded as high as 90 cents. So yeah, I still like that strategy because if those options expire worthless, we're going to make 15%. We don't get a chance to buy the stock, but we still get a 15% return because we've got to put up 20% of the strike price in margin. And we need to be prepared that we may actually be buying this stock at $20 less the credit we receive. So if we got 60 cents, we're going to own the stock at $19.40. Hello, right at that breakout. This is a great strategy. We're going to do another one of these today. So this is the March 17th options expiration. You might say, well, that's just not enough money for me because I like to make 100% on my option trades. Yeah, okay. Those opportunities are certainly out there, but when you've got a very volatile, choppy market, how often can you hit those? It's a very tough trade if you're not day trading. If you're swing trading and you want to take a much longer term approach and you don't want to micromanage the position because you've got full-time employment elsewhere and you can only look at the market maybe once a day or maybe just after the close, this is a very maintenance-free, stress-free strategy. Because in the back of your mind, you're saying, you know what? Let the market do whatever it wants. Let the stock do whatever it wants. You assign me, I'm a willing buyer at $19.50. I've seen enough in the underlying stock to tell me that this has been a nice move higher for many, many months when the market's been floundering and selling off. This stock has been moving higher. Yeah, I want to own it at $19.50. I've got another one of those queued up for you today. Take a look at some trend lines. We're also going to take a look at what the market is doing. This is our daily chart. We've got the market down again today. So we saw a nasty sell-off yesterday. This is a bearish hammer. You can also see this long red candle right here from last week closing on its low. So we've got a lot of chop because here is a green key bar. Oh, hey, this is good. Go to the moon, right? New high. Not so fast. Buyers and sellers are paired off. We're seeing big intraday ranges some days with decent volume. That's when you can really expect these swings. Other days, the market is dead flat and there's no volume. You get a move up, you get a move down. This is classic paired buying and selling. So we need to wait for a victor. We may have one today. I don't know. We'll see. The market tends to do what it has been doing. And what it has been doing is nothing. Lots of moves, no net change. And if we scroll back to a year ago, you're going to see, well, wait a minute, this has been going on for a long time. This is not just something right now that's been happening. This has actually been happening for many months. And if you take out that August high and you take out that October low, you can see we've basically been in a range somewhere between 375 and 415 on the SPY with chunky, choppy movement back and forth. What does that mean? That means that we're not going to see a runaway rally, and that also means that we're not going to see a bloodbath market meltdown because buyers are looking for some place to put all of this cash that is on the sidelines. All of these trillions of dollars that have been printed over the course of the last 5 years, they need a home. So, yes, some money is going to start flowing into stocks, not because valuations are attractive now, but because asset managers are asking themselves, will they be attractive a year from now? If the answer is yes, then they're going to start scaling into positions now. It also means that sellers are fairly aggressive because they see that the Fed is still tightening. Inflation is still a problem. Signs of economic weakness are popping up. So yes, they're also going to be aggressive. So what you have is a bottoming process, and it's basically about time and not anything else, because stocks will need time to grow into their current valuations. Every quarter that ticks by, valuations become more attractive because profits are restored. The comps get easier. That's how this works, barring one big caveat that there are no credit issues, no global financial crisis. I don't see that. Emerging markets are starting to rally, so I believe that long term credit concerns, there really aren't any. I'm not seeing any sovereign debt issues at this point. So, yes, I'm going under the premise that we're going to see some pullbacks, but ultimately we want to start accumulating stocks. We want to take advantage of high option IVs. We want to sell that premium. We're willing to take assignment on these stocks. And then if we do get assigned, we can sell the calls against that stock. We get assigned on the call side. What we've captured is the put premium and the call premium. It's a very lucrative strategy. Again, stress-free strategy. So what am I expecting today? Well, yeah, we're starting off on a negative note. You can see that the market is starting to make lower highs. So that is not a good sign. And you can see also that this support level right here could be tested this morning. That was the low from last week. So yeah, this could be a little nasty day. We had a bearish hammer yesterday, but let's take a look at that price action, because if you are a short-term trader, I know many of you who watch my videos are, you come in yesterday, you come in the day before yesterday, what do you see? You see this big decline in the market. You think, oh, this is it. Yeah, this is a nice gap down. Yeah, the market, we could see a gap and go here, and the market could sell off. But after about a half an hour, you start to see these long tails, and that tells you, no, buyers are here. They're still supporting the market. We've seen two-sided price action. So sellers had their chance, couldn't do anything with it, couldn't move the ball. So now buyers are going to take a shot. Buy, 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 buy. We fill the gap, close on the high. Okay, everything's good. PPI comes out yesterday. Whamba! Hey, gee, no one expected that, right? Wrong. Inflation has been in the headlines for the last year. So, yes, of course, hot numbers are to be expected. I think if there were really any surprise, it would be if the number fell dramatically. Everybody's kind of calling for that and looking for it. And yesterday we did have some Fed comments also. But here's how I see the market is you get this big drop. Okay, gap and go, right? Well, we have to wait to see if that unfolds. We're starting to see some long tails under body here. Yeah, we've got some wicks, so when they try and rally it, wham, rally it, wham. But by the same token, they try to sell it off, bye bye bye, bye bye bye, bye bye bye. This tells us that there is indecision on the part of buyers and sellers. They're paired off and the volume is heavy. We're going to see a breakout. As traders, we need to wait to see what happens right here. Long green candle that did not retrace. Important to watch these candles finish because each of these were long green candles, but they didn't close that way. So you get this nice long green candle here, and then you get follow through here. So now you're starting to stack nice long green candles. And yes, it looks like sellers had their chance to buy. They couldn't do anything with it. Excuse me, sellers had their chance to drive the market down. They couldn't do anything with it. So now you're getting buyers coming in, and we can expect to fill some of this gap. Now we start stacking some long green candles, and they have overlap. So that's not particularly strong either because each of these is retracing. But buyers have the ball. So they try and rally the market, can't quite close the gap. Okay, we get a little bit of a pullback. Now we have a double top. Okay, now you can tell that we haven't been able to close the gap. We have a marginal new high here, barely ticked higher. We've seen selling pressure. We've seen a compression here with two-sided action. We've seen that this rally was not all that strong, and we know from previous days, sellers take a whack, they can't do anything, buyers come in two-sided price action. So here at this high on this bearish hammer, yes, you should start expecting that we're going to see some selling pressure. Excuse me, and that's when you use 1OP. Yes, long red candle here. We're going to see some late day selling. Market closes on its low of the day. We're getting follow through selling today, and you can see the volume increase. So this tells you that this is a legitimate move, and there was some Fed speak. One of the Fed officials was asked if they could see a 50 basis point rate hike at the next FOMC meeting, and he said, it's on the table. Okay, sell, sell, sell. Fed's been super, super hawkish. So they are not helping the situation. I'm not particularly worried about it because I feel that they are closer to the end of the tightening cycle than they are to the beginning of it. So let's take a look at some stocks. I'm going to use our new trend tool here. You can already see on SONO, we had these nice high plus breakouts. Very, very good. We're going to flip through some stocks. WST, you can see that stock tested a long-term trend line right here. And this, by the way, validates that trend line. You can see how the stock got right up to it. This trend line was not drawn to that point. It was drawn to these points. And these endpoints are critically important to how we draw these lines. And then it backed off from that level, but it did break out above two other trend lines. So this is pretty bullish. Could it fill in some of this gap? I would expect it to because we had a bearish hammer yesterday. It finished well off of its high. So yeah, you're probably going to see a little bit of profit taking here for anybody who is long, but this stock may ultimately turn out to be a very nice position. I'm going to keep going down the list until I see something that I like. This is a takeover. You can see way up there, but yes, multiple breakouts. WSO, this stock is hitting some resistance at these trend lines up here. Big bearish hammer. Yeah, not my favorite. I'm going to keep plugging through this list. This is nice. You can see earnings after the close, big rally, two breakouts right in here. resistance right here. Huh, where did that trend line come from? Well, oh yeah, from way back there. Most of you are going to miss a trend line that started 15 months ago. I know I certainly would because it's not a normal view that I have. Is this a legitimate trend line? You betcha it is. So this is what we're going to be using as we trade today. I can't wait to see everybody using these trend lines. I've been using them and testing them for a while. You're going to love them. So yes, on this particular stock, this is a nice breakout. I would want to try and buy this closer to this breakout. So somewhere around the $80 level. Would I want to sell a bullish put spread right here at the $80 strike? Perhaps. I don't know what the option liquidity is, so I'm just going to go into stock ER, and that shows me now the option liquidity is not that good, so I really don't have an opportunity there. What I can do, if I really want to speed things up, which I need to because this is getting to be lengthy, I'm going to use a filter and I'm going to look for decent option liquidity. And now I've got a couple of stocks to look at, and FSLY is one that I really like. You can see how we've got an upward sloping upward sloping high plus trend line that's been breached to the upside. We've got some longer term downward sloping trend lines that have been breached to the upside. Earnings reaction after the close yesterday was very, very positive. Big volume, great relative strength. This is not a bottom picking stock that I would traditionally label as such. A bottom picking stock is where the bottom has fallen out. The stock's dropped 25%, and a week later somebody's saying, oh, I want to come in and buy this. It's probably going to go down a lot more than that. And when you have a stock that's been beaten down and that's showing big signs of weakness, you need to wait for this long-term, many, many months bottoming process. Once you have that bottoming process, you're going to finally start to see buyers, legitimate buyers come in, and all the sellers are out of the way. And now you've got some people who feel that this is legitimately a good longer term buying opportunity. What we're going to do is we're going to look at the options market. We're not going to buy the stock up here. We're going to try and buy it down around the breakout level. By the way, we know that the S&P futures are down about 25 points this morning. We're going to try and take advantage of that because some of this, and actually we can already see the opening indication is lower than that high. This is where the stock is likely to open right in here. We'll let it come in a little bit more because I want to sell some puts. I want to try and buy this stock right here. So what I'm going to do is I'm going to put up the option chain. I'm going to take a look at some of these. So on FSLY, we're going to look at that 1250 put. It was bid at 26 cents. The market's pulling back. The stock is pulling back. We can expect it to come back into this level. I do kind of want to see this long green candle completely preserved, and I believe it will be. I believe that open will hold, so I'm not expecting the stock to really get below $14 or $13.50. I want to sell that 1250 put, and I'd like to get 40 cents for it. So that's the order. If you can get 50 cents for it, if the market looks like it's really pulling back hard today and we get a gap and go to the downside and there's follow through, we know that we could possibly see that because the market is on a technical support level. This is a horizontal support level. If we get a nice long red candle today, yeah, FSLY is going to be hit along with every other stock, and we can get that 50-cent premium for it. So what does 50 cents net us? How does all this work anyway? Well, you've got to put up 20% of the underlying strike price. So if you did a 10 lot, that'd be $2,500 that you have to put up for this strategy. If you get 50 cents for that put, you're going to have 50-cent credit divided by $2,500 margin requirement. That's going to yield you a 20% return in a month. 20% in a month in this market. That's an investment type strategy. That is a really nice return. If the stock pulls back, we're going to own it at $12. Well, why $12? Well, we have the obligation to buy the stock at $12.50. If it is below that, we're going to get assigned. But we got a 50-cent credit. So we're actually long the stock at $12.50 minus 50 cents. We're long it at $12. Yeah, I've got these trend lines supporting it. This was the breakout before. Would I want to own FSLY at $12? That's the question you would have to ask yourself. If the answer is yes, this is the strategy to use. If you don't get assigned, you get a 20% consolation prize. That's a pretty nice consolation prize. Heavy volume, great relative strength, basing process above the 200-day, above the 50-day, above the 100-day moving average. After earnings, big move higher. Yes, buyers are going to be anxious to buy this stock here no matter what the market is doing. If the market falls apart, I'll gladly own that stock at that price. If you have that mentality, this is a great strategy to use, and this is certainly one that you're going to be seeing in future videos. Let's take a look at Z since it's another one. You can see here multiple resistance. This is kind of congested. If it breaks out, it's going to be a really good one. Right now, wait and see. We don't know if it's going to break out or not. We've got the volume, but we know this is a resistance level. One word about trend lines, they represent support and resistance. The normal thought process is, oh, I want to buy the breakout. Oh, I want to short the breakdown. These lines are more likely to hold than they are to be breached. When they are breached, we want long candles and massive, I mean massive volume getting through those price points. When we have those two ingredients, the next leg of the trend is going to continue. When we don't have those ingredients, we got tiny little candles and they're just kind of nibbling and poking on light volume. They're not going to get through that, okay? You're probably going to see a reversal off of that level, and that actually sets up a whole different series of trading opportunities that we'll also be covering using these trend lines. That's all I've got for you today. Thanks so much for watching. Did I promise you 2 videos a week? Yes, I did when I did one 3 days ago. I'm really committed to this. I'm going to try and get 2 videos out each and every week for you. Thanks so much for watching. Trade well. If you haven't taken the free trial, come to www.oneoption.com. Take the free trial. You have got to see these trend lines. I don't just show you the current trend lines. Let's zoom out and take a look at where this upper came into play. By the way, we'll just zoom out very quickly and see where those longer term trend lines are coming into play. Right in here, right to there, right in here, right to there. Yeah, these are all valid trend lines. We can also go in and we can take a look at all of the past trend lines. This is going to get very busy here. And for many of you, you're probably going to freak out. We'll take a look at FSLY because there's so many of them, but there are a lot of trend lines that are coming into play. So automated trend lines, we're going to be focusing on the ones that are currently impacting the stock. We're going to be watching for the price action around those trend lines, and we're going to be trading accordingly. Thanks so much. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.